Welcome. You're watching India Market Open. We are still in the midst of the earnings season, but there's enough and more happening on the regulatory front to protect retail participation, which I think is the big one. I know it's a recommendation paper yet, so what actually comes through is going to be anybody's guess. But apart from that, three big central bank meets as well. So there's enough and more to tap this morning.
Yeah, 24 hours of central bank meeting, and maybe the SEBI thing. I mean, the first of the salvos, maybe there is more in store.
Yeah.
Let's see what kind of an impact does it have today and over the course of the next few days, weeks, months, depending on what more they do after this initial consultation paper.
Well, one thing I think we can say with certainty is that it's more. It should be taken more seriously than just a consultation paper.
Yeah.
Just look at the series of events, the statements coming in from all of the regulators, what Finance Minister Nirmala Sitharaman told us in the exclusive to NDTV after the budget, saying that it's to the regulator to take decision, but this is an indication that we've given by increasing STT.
Exactly, yeah.
So more indications in place. Could we see something in October later? Of course, we'll wait to see. So a lot to unpack. I'll very quickly go through the global cues. And I think, yes, the big one is all the central bankers meeting and what indications they're going to give. Obviously, no clear direction ahead of those key meets across global markets. So let me start with US markets, which were completely mixed. The Dow was the only one up in the green, but the Nasdaq really slid, and that rotation out of mega cap tech stocks continues. Microsoft numbers, which came in after closing bell, were disappointing. Their cloud revenues have not been on par. Big slide in the futures, and you'll see that playing out tomorrow in the cash markets in the US as well. So tech stocks are going to continue to be under pressure. Is that an indication for us? We'll have to obviously wait and see. Bond yields as well, quite benign actually, not half bad ahead of the Fed meet at 4.14 at the 10-year Treasury. And just look at what the key indicator really is. Later tonight, India time, you will know what Jerome Powell wants to do, and that will be the big one. Crude prices actually have recovered after a bit of a slide. China consumption has been a big question, but there was a recovery there, and you're seeing that on the NYMEX crude numbers as well, the Brent at 79.20, but that recovery has come after a fair amount of a dip. And Asia is interesting this morning. Japan definitely under pressure, down nearly a percentage on the index, on the Nikkei, ahead of that Bank of Japan meet. But yeah, three key central bank meets ahead, and that's what's going to be in focus. I'm going to quickly pull up the implied open for you. We look like we're starting positively, which I think is good. In the middle of all of this, we'll have to wait and see how much of an impact SEBI guidelines or recommendations, actually guidelines, it's a discussion paper right now, have, if at all, and what pockets of stocks are impacted. That's what we'll have to wait and see. But in terms of what yesterday's markets looked like for fund flows, we should pull that up because it's an interesting picture. It's a complete balancing act, I would say. FIs were selling, they were dumping, and DIs were buying. So you had, a complete balance over there. DIs, in fact, have bought 23,000 crore rupees in July so far. So domestic investors and mutual funds are really piling it in. So those were some of the big indicators.
Yeah, most certainly. Okay, very quickly the trade setup. I mean, frankly, not too much to add, but for the fact that on a consolidation day, the Nifty PCR went inched up to about 1.09 or 1.10. Typically at 1.3, 1.4 is when the worrying bells come in for now. Inching higher, not quite out there. But, I mean, enough and more people will tell you that now we are finding resistances. I mean, just look at the Nifty Bank yet again. Second day on a trot, you see the levels from where the Nifty Bank retreated. It's 52,000. It's clearly finding resistance there. And now the trader, the trading mentality might be that it's a sell on rise coming near to 52,000. Good time to initiate some shorts there. So it's seeing that 2 days on a trot. Lower highs, lower lows, 2 days on a trot now. So keep an eye out for Bank Nifty more than the Nifty, because that is the one that is driving the sentiment in the near term, and maybe keeping the Nifty capped at about 25,000 as well. The Bank Nifty is the perpetrator, seemingly. And pharmaceuticals, I mean, the numbers, notwithstanding the commentary from some of the pharma names, has been spectacular. I mean, and some of the spec chem names as well. The results, by the way, for Navin Fluorine were terrible, and we'll get to that in a moment. But the commentary that has come in yesterday from Privi Speciality or from some of the other chemical companies about capacities coming up, earnings ramp up looking likely in late FY25 and FY26 certainly remains a pocket that you want to keep an eye out for. So certainly keep that at the back of your mind.
What about auto? What was going on there? Tata Motors eking out 3.5% gains, and this is, of course, record highs on the auto index. So while you're talking about how well pharma is doing, I think it's worth a mention that auto has also come in and saved the day for the index and trade yesterday. Energy stocks also doing quite well. So while there is resistance and selling at higher levels, we must also acknowledge the fact that sector rotation is supporting the market. So at any time when you'd imagine that there'd be selling and the markets would cool off, you'll have one random sector popping out without any major reason for those gains. But we'll go into stocks and dwell into that F&O recommendations that have come in from the regulator. Remember, Indian households have been losing 60,000 crores annually on back of F&O losses. Now that is significant. This, of course, we'll talk about will be a loss for maybe trading houses, brokerages, but could be a win-win for the mutual funds. So it's going to be an interesting game that's going to play out over the next couple of months. But
can I just add something on that from the SEBI note? And obviously there's 7 recommendations. We'll talk about them in detail. We'll get expert views in. But just the data they put out, I found very interesting for FY23-24 specifically. It puts it into perspective why the worry. So there were 92.5 lakh unique investors who traded in NSE derivatives. This includes individuals and entities, etc. So unique investors. Out of these, only 14.22 lakhs made profits. So this is 85 out of every 100 investors have made losses, and those losses in 23-24 have come up to nearly 52,000 crores, 51,689 crore rupees, if I were to be very specific. So, just the fact that SEBI laid out this backdrop in its discussion paper is also telling you and giving you a sense of where it's coming from. So even if there is a tweak up or down, maybe if there's not so much of a restriction of expiry days in a week or whatever they do in terms of lot sizes, but that's directionally, I think, the dead giveaway of why there is concern.
But I'm pretty sure there will be resistance from the exchanges and the brokerages. Now, how well that's taken is going to be something we want to watch.
Yeah, but maybe
NSE does have 4 expiries weekly, right? They've got Nifty Mid-Cap, Nifty, Bank Nifty. So they may stand to lose a little bit more than BSE, but...
No, and the proposal is that you restrict 1 per week to each exchanges. That's one of the 7 proposals.
I think... But just to put another number to that, the turnover in index option in terms of premium terms has gone up from 4.5 lakh crores to 140 lakh crores in 5 years. So yeah, it's significant. But like I said, we'll dwell on this in a few minutes from now. Just very quickly, stocks to watch. I've got a bunch of great earnings this morning. Macro tech developers. I'll start with them. Not in terms of market size, but this one also stood out in terms of the kind of reporting they've done for the quarter. It's been one of their best quarters. That's what they've said. Revenue was up 76% for macro tech developers at 2,847 crores. EBITDA came in at 757 crores versus 330. That's almost doubling down, if not more than that. Margins have improved at 26.6% versus 20.4%. Net profit has come in at 476 crores versus 179. This is slightly lower than Bloomberg expectations, but if you just look at point to point in terms of performance, it's a clear beat in terms of what we'd seen for Macrotech last quarter. Key takeaways, they've reported pre-sales of 4,030 crores at a 33% EBITDA margin. So they've not compromised on margins and yet managed to sell quite well. And I think that is a clear standout for me on Macrotech developers. They've also sold significantly in the Pune area, 50% uptake in sales in Pune. They've said that they look to becoming the largest developer in Pune in the next 6 years. They've also added 3 new projects in MMR and Pune to the tune of 11,100 crores, which is a gross development value. So it's a huge sort of development project that they've managed to add in this quarter. All in all, it's looking good for Macrotech. The stock was down 2.5% in trade yesterday. We will have to see how the markets react to these earnings in early trade this morning. Well, the other one that was a clear beat was Torrent Power. Fantastic numbers. Revenues were up 23.3% to report at 9,034 crores. Profitability was up 88%. Now that's a big jump coming in on profitability, and this is all core business activity for Torrent Power at 996 crores. Total generation capacity, including projects, is at 7,492 megawatts. They've also issued a tender, and these are some reports we saw last evening. Some agencies have reported that they're seeking supplies of LPG for a 10-year period. So they've put out the tender. Let's see what happens on that LPG that they're seeking for 10 years. Well, a couple of reasons why they've managed to eke out such strong profits. In contribution from merchant power sales and gas-based power plants has increased significantly. There's also an increase in contribution from licensed distribution business, and this comes in despite the fact that tax expenses have actually gone up. So all in all, strong quarter. Torrent Power should be getting a thumbs up, and 88% in profits is not something we see often on such a large company. Well, another one that is largely a mixed bag is Tata Consumer. The stock has not been doing very well in the last couple of days. What you want to remember is it's been an outlier. So when consumption has been performing well, the stock's been left out. On a bad day, it's holding out as well. But a couple of takeaways. The erstwhile consumption major has reported revenues that have seen an increase of 16.3%. EBITDA has also improved 22.4%. Margins have also come in higher at 15.3 versus 14.6. Its net profit that has actually declined, coming in at 314 crores versus 359 crores. So operationally, it's been a solid quarter for Tata Consumer. Why you're seeing that decline in profitability is we'll tell you why. Because the other expenses have gone up. Amortization costs on the new acquisitions. Remember, this year has been about acquisitions for Tata Consumer, on back of which that profit number looks weaker, even though their core business is actually well placed. And there's also been a rise, inflation causing a rise in the price of tea and coffee prices. But they've said that the outlook looks optimistic. They're bullish on volume growth. They're bullish on rural recovery. They're also very bullish on the international business that's recorded a 10% growth in value terms and an 8% growth in constant currency. So all in all, I think great quarter for GAIL, great quarter for, Torrent Power. I'm obviously thinking about GAIL because they've had a great quarter too.
Yeah.
Macro Tech, in my opinion, and Tata Consumer as well. Good quarter. Brokerages aren't disappointed, and I'm taking heart from that because I believe the profitability will be impacted for the next few quarters as they continue to amortize the acquisitions they've made. But business is looking okay.
Yeah.
So,
I was just going to say, GAIL is actually rocking. Think of it.
Yeah, there's a bit of a competition with Torrent Power.
Yeah. GAIL had an 80% jump in its EBITDA, and profits up 77.5%. I mean, GAIL has also had a fabulous quarter, and PSEs are back in vogue. Like we saw yesterday also in trades, and Nifty PSE was good. So yeah, that's one to keep an eye on. So I'm starting off with Dixon. So the numbers are actually looking very good, save for the margin figure year on year, which is a bit of a squeeze. The management in its con call says that's nothing out of the ordinary, but that might be the fly in the ointment, so to speak, because otherwise the numbers are just very, very strong. Revenues jumped from 3272 crores to 6580. EBITDA is up 88%. Net profit has also jumped significantly. Just their mobile revenues have grown 189% year on year. Margins, though, have gone from 4% to 3.8%. So not too much of a squeeze over there. They've finalized HCL as the technological partner for display models, and 25 to 30% of the Motorola mobile phones that Dixon is manufacturing will be for exports. Overall, good numbers. The security equipment business did nothing this quarter, but remember, they're completely rejigging that part of the business. What is Nuvama saying? They're saying retain a hold, target price of 12,000 rupees. And an upside, which is not really that much. Above expectation results with revenue PAT surging 101 and 106%. I mean, for a company that size and for the strides they've already made, it's quite astonishing what Dixon has done. And like I keep saying, it's the poster child of the whole PLI endeavor. Maybe not very positive for them that more has not come on PLI, but nevertheless, the mobile and EMS segment has driven growth. They've guided for a steep ramp up in mobile revenue in FY25. That's something to keep in mind. New customers have been onboarded and one new addition is expected. Backward integration in new products will drive their growth. So Nuvama has also raised their PAT targets for 25 and 26 by 13 and 16%. So the Dixon stock is one to look out for. I don't know if there's so much more of an upside left, though. That's the only question that would come in.
Yeah, just one. I'm looking forward to the conversation that they'll have with us at 10:30 today. So that is keen. And I think if the mobile revenue ramp up happens, then naturally the margins will not remain at 4, but will come in for a squeeze because that's the low margin business. But maybe they are doing it with a reason because they want to grow the top line. So therefore, it's a part of the strategy, I reckon.
That's actually something that we look forward to hearing from them, because that strategy has already started working in terms of the impact on the margin side of it, and the top line has ramped up. Indus Tower is the other one, because what a high momentum stock. I mean, it's ever since Vodafone has sort of come back in action, Indus has piggy banked on it. So the numbers were pretty decent. Revenue up to 2.6%, EBITDA has grown close to 11%. Margins have also increased from 57% to 61.6%. Net profits are also up. This is the first buyback that they've done in about 2 years. So while revenue was below estimates slightly, margins and profits were above. So that's going to be one to watch out. They've also seen a reversal of provision for Vodafone's past dues. So that has to be baked into the numbers at some point. And remember, Indus has now recovered about 1,300 crores of past dues. There's still 4,600 crores to go for Indus Towers. It's their first actually payout also in the last 2 years. Citi is quite bullish. They have a target price of 500 rupees on the stock. And they say that the EBITDA rise is definitely a beat. So Indus is one that you might see a positive view on. Wari, again, very nice numbers from Wari coming in. Revenues up 83%, EBITDA is 41 crores versus 13 crores. I mean, businesses in this space are generally on an uptick because of the push for renewables, etc. And Wari is well placed to make the most of it. EBITDA margins have jumped quite significantly from 10.4 to 17%, and net profit is also up from 9 crores to 28 crores year on year. So good numbers for Wari. Their unexecuted order book is 2191 megawatts and will be executed in the next 9 to 12 months. So at least these first 3 stocks, I think, could see a pretty good day. I'm not so sure about how Dixon will be seen, but the numbers are definitely good.
Yeah, seems solid. Let's see. Just that it's an expensive stock. But I want to dwell on GAIL for a moment because the numbers just look so strong. So revenues up 6% at 34,738 crores. The estimates were 32,892. So marginally higher on the revenue front on that base as well, GAIL. But the margin number looked very solid, 13.8% versus 8.1%. And as a result of which the bottom line numbers at 3183 crores, a 77% uptake relative to estimates of 2148 crores. And remember, while the volume data is awaited from GAIL, the con call is at 11 a.m. today. I'm guessing a lot of people will log into the call, and which is why we don't have too many brokerage notes out there. But the gas transmission and the gas trading EBIT, both were up over 45%. So very strong performance from GAIL optically. Very likely that it will react to these numbers itself. And then on the basis of the con call commentary, you might well see some more moves there. So that is something you want to watch out for in the session today. The other one is a surprise move, but Johnson Controls Hitachi. This one came into flavor when this global parent sale happened, and therefore there's this belief that Johnson Controls will see a change of parent and maybe an open offer, what have you. But be that as it may, look at the individual numbers of the India unit. Revenues up 75.6% at 996 versus 567. An EBITDA of 57 crores versus a loss. A PAT of 36 crores versus a loss of 41 crores. So suffice to say that this stock could have a bit of a reaction. And much as I thought that it's not as liquid a name, it didn't used to be. But I think the recent volumes have been large. So maybe you see a bit of trading activity on this one. So that's the second one you want to watch out for. And a new list or recent listing, if you will, Zaggle Prepaid. Very strong numbers there. Revenues up 252 versus 118. Margins expanded. And on that base, for margins to move up 230 basis points from 6.7 to 8.9. And then therefore a PAT number of 17 versus 2 crores. Small stock, but could see a bit of an uptick in the session today, so do watch out for this one as well.
And also a very, very expensive stock at that.
Yeah,
I think that's the other one on Zagat Prepaid. But I think we've talked to the management a bunch of times. This kind of interesting stuff they seem to be doing across the board. One is tough to understand, but second, I definitely think there's enough and more there. Couple of more smaller ones. I don't know if you want to mention if you've got time, but Titagarh reported numbers. They were okay. They reported an 8.5% increase in profitability at 67 crores for the first quarter. In the same quarter, they reported 62 crores last year. Revenues have dipped. Margins have remained largely okay for Titagarh. So not a great quarter in that sense for them. Star Health, on the other hand, managed to post good numbers. Total income was up 15.7%. Net profit also was higher. And one more from the wealth space is 361 WAM. I mean, fantastic. I don't even know whether what justifies these kind of run-ups that we've seen on 360 WAM, but very, very strong quarter for them as well. Total revenue is up 60%. Net profit is up 34%. So that's the kind of quarter it's been. Remember, 361 WAM is also a product-focused business. So lots happening on that front either.
I think all I'll mention, and then we'll get into that conversation as well, is what the immediate impact would be on SEBI's proposals. And one will definitely be on the BSE stock. And this is what Jefferies is also saying. They're saying that removal of BankX weekly contract could impact the EPS of BSE by 7 to 9% over FY25 and FY27. So that's one stock which could get hit. They're saying clearing members like Nuvama could be less impacted, but may see second-order impact. And exchanges and retail-focused brokerages are going to be most affected. So that entire space, which has completely been buzzing on the back of the Indian investor getting a taste of F&O, could see that kind of a reversal today. And that's, I think, one pocket we should look at. But on the question of decreasing trading volumes, NSE MD and CEO Ashish Chauhan said that NSE will do as SEBI asks. His comments, of course, came right before the consultation paper was put out. Listen in.
We are a regulator first. And the second is whatever regulator tells us we have to do. So put together, whatever they say, we will accept.
But NSE is also a profit-making.
Only as a byproduct. Profit is not the motive of running any exchange or any MIA.
Okay, Amit Khurana, who looks at all of these pockets very, very closely, head of equities at Dolat Capital Johnson, to tell us what he thinks could the big picture potential impact be of a move or a proposal like this. Amit, not a move, a proposal. Niraj here, good morning. Thanks for joining in. A proposal as yet, but you guys are big on the derivative space as well. What do you think is the potential impact if most, if not all, of these proposals get accepted and put into practice?
Yeah, hi. Thanks, Niraj. I think there are two broader sort of philosophy points that one can put in. One, they are essentially targeting the weeklies and they are targeting the option segment. The second important part is essentially this is the starting point, which I believe is moving from sachetization of options market, the F&O market, towards institutionalizing it, wherein the regulator essentially has a philosophy, and rightly so, that the retail investors, having a limited understanding of the options market and the risks that they are taking, are being too exposed, and especially the post-COVID period when it went through a significant boom led by technology infrastructure, enablers from the intermediaries like brokers, and whole lot of other social media, which led to a significant increase in the activity. I think it's about time that it is managed well and the risks are highlighted. The impact will obviously be that the weekly product will have a significant dent, and brokerages which are exposed to the retail side of the businesses will take a significant amount of impact on that. Obviously, exchanges will also have a lower fee, lower revenue, and so will the STT get impacted from the government perspective. So all in all, I think the objective here is less from the revenue side of it, but more from the risk management and managing the systemic level issues, which can essentially risk the entire system at any point of time. So might as well control it when things can be understood better, rather than being as a reactive regulator.
Now, Amit, you guys have a significant exposure to the foreign insti trader using derivatives, presumably at your end too. How high was this volume on these multiple weekly segments available, and could it deter or could it be a dampener for an institutional participant as well if the number of weeklies are cut down?
Well, difficult to decipher as to how much will it impact because most of the INSTI was more monthly rather than weekly. Weekly was more a sachetized product for the retail segment because the capital outlay was relatively lower. Most of the INSTI and especially the FPI books or even the domestic R books move more on the monthly side. Liquidity impact, it's difficult to decipher right now because eventually as one leg gets impacted, there will be some impact, but whether it will lead to a significant increase in the spreads, I don't think so. They will eventually get normalized, but we have to see how it evolves.
Amit, hi, it's also Samina joining in. Help us break down a few more things, right? Let's start with the calendar spread. Now, what the regulator is trying to do is remove that arbitrage opportunity that was happening on expiry day. Do you feel this could have a significant impact in reducing volatility on those expiry days? Because you can still buy an option and sell an option, just not on the day, right? So how do you think this is going to impact a retail investor?
Precisely, and that essentially is aimed at increasing the capital outlay that any investor puts on the table, and a higher capital outlay will become a natural deterrent to those kind of activities. Earlier, it was much easier to do, and you do not have to put in very high level of margin. I understand these are two measures. One, it is not being allowed on the same day, and second, the margin outlays will also go up dramatically. And along with that, you will also have the higher lot sizes. So we are seeing measures being done on every front to make sure that there are enough deterrents. And only the sophisticated investors or investors who have a very significant level of capacity to understand the risks and absorb likely losses which may turn out from such trades are only participating in this market. So as I said earlier, the sachetization phase of the Indian option market is essentially getting over, and we are moving towards the more institutionalized, the sophisticated kind of investors who will possibly be able to make trades here.
Well, sure, this is of course a good the intent is very clearly there. Now, we can talk about, of course, what they've done in terms of increasing the margin, the notional value, but in principle, this is a recommendation. This is going to come with opposition from the exchanges and the brokerages. Do you feel like some of these or most of these recommendations will become regulatory in the next couple of months in terms of timelines? What are you anticipating, and how well will this be taken up by brokerages and exchanges?
Well, one of the lessons we've always learned being part of the market is you never fight with the regulator, and for the right reason. Okay. And I must also mention that we do not have any vested interest because we are not a retail brokerage house. We are an INSTI house. So from our perspective, it really does not impact our business, except that the liquidity impact will be there and according to the volumes will adjust. But having said that, I think there will be a fair amount of discussion, and I think the regulator has been pretty constructive about the feedback that has been given by the stakeholders, including brokers and exchanges. But let us look at the big picture, which is that the market is taking too much of a risk. Some of the retail investors are taking too much of a risk, and we keep hearing those stories and versions on social media and amongst our peer group that everybody seems to be trading in the market. I don't think that's a very healthy trend. We need an investing sort of a mindset amongst the populace. We need an investing sort of a mindset amongst the younger population. And therefore, the habits have to be changed accordingly through a nudge. I don't think this is beyond a nudge. It may look like a slap, but I think this is how the system needs to be managed proactively rather than reactively. So there will be a fair amount of discussions around this, and I think somewhere a middle path will be found. And ultimately, we have to accept that these regulations are going to come in.
I'm just wondering, Amit, good morning. What is the middle path between a nudge and a slap? Since those are the two ways that you described it. But just from your sense, and you talked about how the more evolved investor will be now left behind in this space, the sachet kind of investment will move on. What is the impact on volumes that you see? So, for example, if SEBI is saying that there were 92 lakh unique investors in 23-24, do you see that dipping significantly?
Well, that's something that we'll have to see. How much of that was doing pure, options trading, and there could be some number out of it. We'll have to see that. I don't want to speculate on that part right now. Let the regulations evolve. Let the the education programs take care of so many other issues. And if that number has to dip short term, I don't think one should be too bothered about it, because ultimately it's a system which we got to manage in a very, very risk averse manner. Make sure that the longer term trajectory of the investor growth, the returns that they make, is far more stable rather than just trying to make one-off here and there and losing 80%, 90% of the cases. Overall, I feel that there will be some realignments which will happen. The sophisticated investors who are serviced by the professional managers will probably.
Yes? Okay, I think we need to get that feed back up. We've lost that feed from Amit Khurana. But good perspective there, folks. And, one clarity that seems to be coming in is that this is something that needs to be accepted. It's going to be something that you have to live with. And in fact, while we try and get Amit up, let's just listen in quickly to what SEBI chairperson Madhuri Puri Butch also said. She gave the rationale of the market regulator in introducing curbs on F&O.
If there is 50,000, 60,000 crores of losses by individual households in the F&O segment, what would you say to that? If 50, 60,000 crores in a year is going away from household saving into losses in F&O segment, whereas that could have been productively deployed as a part of maybe the next IPO round, maybe the mutual funds, maybe more productive uses for the economy, why would you say that that's not a macro issue? At 50, 60,000 crores, that's pretty macro according to me. This is not about some 200, 600 crores.
50, 60,000 crore rupees of household savings going into F&O trading, and that's really the concerns being put out. Amit Khurana back with us. Mr. Khurana, just one question from my end. What is the immediate kind of impact you see on market sentiment, considering that these are guidelines, or these are, proposals right now? Do you see any specific bucket of stocks perhaps being hit in the capital market space or exchanges?
Obviously, the guys who have an exposure to this kind of revenue stream will take the first knock. And I think the overall this expectation was very much there for the last so many months. So I think the market will eventually take that into stride, and especially
struggling with Amit's feed, but we'll try and connect back. But I think another interesting point which we should try and discuss with Amit, but is whether this would increase speculation in the cash market. So I guess if a trader needs to make money and wants to make money, if that is the intent, for all you know, there could be some migration to speculation in the cash market as well, right? I mean, there's always ways and means around it.
It would cost you more, right?
More.
Well, you're anyway increasing notional margin numbers any which way.
Yeah, so maybe the derivative volumes are happening because they didn't have to pay so much. But now if they have to pay so much,
then you'd rather do it in a cash market
or not do it.
You're hopeful.
But the difference between even an increased margin versus cash market would be a lot.
It really depends on what stock. But these are index. These are index trades, right?
So it'll be might run up.
What might happen is that because there is so much of clampdown on index, the stock futures segment might see a bit of a fillip,
might move
because
to specific counters.
It's been so heavily concentrated on the index side.
Yeah.
This, to my mind, actually, this is a lot milder than what the street was fearing, because the street was fearing clamps across the bucket. It's coming in index. It's not coming in stock futures as yet. Maybe it will.
But index is a much deeper market.
Completely agree.
Than
but if stocks also had come in, then that might have been a problem.
How do you define which stocks and what stocks? But I guess that could be the next step. Who knows and who's to tell?
What else could have happened? Because the key things are there. Your number of expiries per week are going down.
But the margin increase or the lot size increase that you're doing on the index, if you do it on stocks as well, that's a dampener for people who do single stock futures.
Maybe this is phase one.
Yeah, maybe it is. I'm sure the street will
there is going to be a
way.
little bit of a pushback from the exchanges, I'm pretty certain, and brokerages. But like Amit said, you can't defy the regulator. We'll take a break. We'll come back. As always, Agam Vakil brings us all the F&O action on the other side, so stay tuned.
Welcome back. This is India Market Open. We are looking at the futures and options space and how things are shaping up, given the Nifty once again has had yet another day where it nearly was 25,000, but we really didn't see that come through. As far as the futures go, again, it was a day of trade where the Nifty closed flat. We didn't see too much change in the open interest either. The Bank Nifty also did advance marginally, but again, not too much traction there. In fact, further unwinding as far as positioning is concerned here. Now we move on and talk about the options market. Today's the weekly Bank Nifty options expiry, but we'll talk about that in just a bit. As far as the Nifty is concerned, yesterday was a day where a lot of these traders took advantage of the fact that you had a sudden decline on an intraday basis, which is why you saw a lot more writing around the 25,000 call and, the 25,200 call as well. On the lower end, we continue to see more traction as far as the 24,500 and 24,600 puts are concerned. We move on and talk about, the Bank Nifty. Today is the weekly Bank Nifty options expiry. Again, the midpoint here at this point in time does seem like 51,500, but there could potentially be an attempt to move towards the mark of 52,000 as well. In terms of stocks, yesterday was a day of trade where we did see a lot more buying coming through. So India Mart, GNFC, Godrej Properties, Chambal Fertilizers, all of them looking at longs coming in. And besides that, we're also looking at short covering for something like Colgate Palmolive, Naveen Fluorine, SBI Cards, among many others. So all in all, a good day of trade. It was a flat day of trade, but let's see what our experts are doing in such markets. We have Akshay P. Bhagwat of GM Financial, who's joining us on the show right now. Akshay, very quickly, your view on the benchmarks at the moment. How are you looking at trade here?
Good morning, Agam. So yes, last couple of days has seen muted action, both in terms of the FII action in the index future segment, as well as the price action. So 25,000 is some sort of a short-term resistance or an intraday resistance, considering the fact that a lot of call writing bets are positioned at the level of 25,000, which is a psychological level. Also, in wake of the FOMC event due later, there is some muted action because traders want to stay a bit light ahead of the event. That's what the open interest data is suggesting. Roughly 24,750, that's an important level one needs to keep on basis spot Nifty. Till this level holds, the view is positive. Index should be choppy, but continue to trade in a range. 24,750 on the lower end and 25,000 on the upper end is the range which I'm anticipating for today or tomorrow. But overall, the trend is still positive. There may be a re-attempt of breaking past the 25,000 mark. And if it does, be ready for levels of 25,200.
Right. Akshay, so let's talk about Bajaj Finserv then. How are you looking at trade here?
Yes. So I have a positive view on Bajaj Finserv. In the last couple of trading sessions, there has been positive long additions in the stock in the derivative space. Price structure is also strong and heading for a possible breakout above the levels of 1650. My target projections are for around 1700 for the month of August, for which I'm recommending a bull call spread for the 29th August expiry, buying a 1640 call approximately at an option premium of 47, and simultaneously you sell a deep OTM call of 1700 strike at a premium of 23. This would lock in a profit of around approximately 9,500, and on this trade you can work with a stop loss of around 6,200.
Okay, so that's a spread as far as Bajaj Finserv is concerned, positive one. But what about Vedanta, Akshay? How are you playing this one?
Yes, so the metal packs have seen some good positive positioning in the last couple of trading sessions, and out of the entire space, Vedanta is my top bet. If you look at the price structure last 1.5 2 months, it's been in a range with time and again bounce backs being seen from the level of 430 odd zone till the 480 zone. So I'm expecting a target of 480 to 490 very soon in Vedanta, for which I recommend an option vanilla buy call for the 29th August expiry. 470 strike is the strike I would recommend to go long on. And the target for this would be 11. That's the first target. 15, that's the second target. And you can keep a stop loss of 3 on the option premium on this trade.
All right, Akshay, we'll leave it at that. Thank you so much for joining us and giving us those handful of ideas to work around with. Of course, Bajaj Finserv and Vedanta is what we are keeping an eye on from Akshay's standpoint. With that, it's back to you.
All right, thank you for that. Kush Bora, founder of kushbora.com, joins us. Kush, very good morning to you. Now, before I come to you on the charts, etc., just wanted to know if you had a view, if any, on these SEBI guidelines on F&O volumes.
Hi, Tamanna. First of all, very good morning to you. A rather strong one, actually. I have a very strong view on, the guidelines came about, and I'm extremely happy to see, that some of these measures are in fact the ones that will deter, retail participation. Maybe as I was listening to, you, Samina, Niraj talk about it a while back. Maybe there will be some pushback, not only from the broker and the exchanges, broker community and the exchanges, but also if you see the social media feeds, not everyone's entirely happy about it. But I think that's okay because that's still a small section. If you listen to the macro numbers that the SEBI chairperson put out, the kind of losses that everyone's making as a whole is quite a lot, and I think it's a good way of systematically deterring retail participation from F&O. So I am actually quite happy to see the kind of measures that have come about.
So that's an interesting view and a strong view that you're happy that it'll become a little saner. And I think, there's two views to it. One is that, of course, that how much of interference there should be from regulators, and then, of course, how much regulation is needed. With that, let's come to the business of the day, Kush. Let's start with how you're looking at the indices.
Well, the view continues, and the indices have been telling us the same story for the last couple of days, which is, we've been moving higher but not sustaining. Now, on the Nifty, we all know 25,000 is proving to be that, glass ceiling that it's not touched, forget even breaking, missed it only by a whisker 2 days ago. But I think that view remains. If 25,000 is indeed taken out, then I think there'll be this further short covering rally that might come about and take it higher another 150, maybe 200 points. But I'll wait for that to happen rather than anticipate it and go any kind of, create any kind of long positions. So I will wait. For me, any kind of a pullback, let's say towards 24,700, 750, perhaps might be a more meaningful level to create short, long positions. There, my risk reward ratio is favorable. So at the moment, Nifty, no long positions recommended. But if you have them, given the kind of momentum we've seen, you can continue to hold your long positions. Bank Nifty, again, a very similar story. 52,000, 52,200 as the broad range has not been taken out. So until that happens, the near-term pressure on Bank Nifty will continue. And in fact, this is, a very good shorting candidate. Now, today being the monthly expiry, there could be volatility. We could see an attempt, at that level, perhaps even, breaching that for a while, like we've seen in the past, 2 days ago. But until we close above 52,000, perhaps 52,200, the near-term bearish view on the Bank Nifty will continue.
Kush, in terms of stock ideas this morning, what is on your buy list and if you have any on your sell list?
So, Samina, it's just, I think, incidental that, the SEBI has come out with these proposals, and both of my picks are from the cash segment, as I said, purely incidental. One of them is KFin Technologies. We've seen a very smart rebound from lower levels. There was a resistance around that 800, 815 mark. That's been taken out on a closing basis. So that's a healthy sign. 850, 880 are the targets to look for. 790 is the support zone where you place your stop loss. HFCL, this stock in the last couple of sessions has had a very good run. Here the resistance was around 130, 132. We've had a closing above this, and the volumes have been increasing day on day for the last 3 to 4 sessions. So HFCL is also on the radar for targets of 141 and 146. 130 is where you place your stop loss.
Right. We also have with us Mayuresh Joshi, Head Research of Market Smith India, joining in. Hi, good morning, Mayuresh. Thanks for joining in. Well, I know you are a fundamental analyst for the markets, but why don't you tell us what you made of SEBI's recommendations to curb and protect retail speculative trading that's been taking place in the country?
Morning, Samina. No, so I think as a market participant, you should be cognizant of what is happening around us. But two things happening here. When I speak to a lot of my colleagues at other broking outfits as well, this was expected to come through. So to that extent, the market will take it in its stride, because there were measures that SEBI was indicating to a large extent. And this is probably something which is now put on record. Obviously, I think the excessive speculation that is happening, when I meet normal people in normal course of interactions. I think the kind of enthusiasm or the drive that a lot of these individuals have, specifically towards the F&O segment, without any basic understanding, I think that really is very, very scary. And therefore, I think the statistics that SEBI has put out in terms of the loss that a lot of these F&O traders are making is primarily based on this facet as a primary factor, considering other secondary factors. So I think largely the street was expecting something to come about. A lot of broking outfits were expecting something to come about. So in my opinion, I think the market will take it with strength.
Okay. Some stocks which we should discuss. So before we get into today's movers, Mayuresh, what surprised me yesterday was the move on Varun Beverages after the numbers that came out. Sure, there were flows and there was some funds which were selling. So maybe that yesterday was the day like that. But for the result that it delivered, the treatment meted out wasn't quite commensurate. Would you be a buyer in Varun Beverages post these numbers and the fall that we saw yesterday?
Morning, Niraj. But one must really see the kind of move that Varun Beverages has given, Niraj, over the last 2 years. So I think it's been one of the stellar movers when it comes to the consumption space as a whole. As a clear disclaimer, a few weeks back, we did book significant amount of profits out of this one. We had entered at significant lower levels. To the extent of the results itself, Niraj, you're absolutely right. I think the results were very, very good. There are no two ways about it. The expectations in terms of their India, Sri Lanka, Nepal business expected to continue doing well from a volume perspective, both in terms of the carbonated portfolio that they have and the non-carbonated portfolio, which is also expected to show increase in terms of contribution to the overall volumes and top line as well. Will be evident by numbers in the next few quarters. The Africa business will start picking up as well. There is expectations of more value-added products expected to come through. The energy business through Sting, the energy drink business through Sting is also expected to pick up steam, as well as the water business, which is expected to be very, very stable. So to that extent, I think gross margins, the EBITDA margin performance, and the expectations there of stability of both these numbers can very well continue. However, I think it's a late stage base even now after the correction. And therefore, I think our take a few weeks back when we booked a significant amount was on two counts. One, I think the valuation comfort is not there. It is penciling in a large part of the earnings move that can happen over the next 1 year. And the second element obviously is from a price action perspective, as we see it at Markets with India, a late stage base always can succumb to some element of profit booking, which we saw yesterday. So decent set of numbers, but I think these two elements is something which, at least at our end, is causing a little bit of discomfort at this juncture. And we made sufficient amount of money, very frankly, Niraj, on this count.
Right. Kush, a couple of other stocks worth mentioning. Everything in the auto pack yesterday has had a dream run. Anything in the auto stocks that still could be a constructive long trade? Kush,
Tata Motors, Tata Motors is, it's at the moment, I would say, a done deal because of the kind of run-up that it's seen in the last 4 or 5 sessions. So, no new fresh positions unless someone wants to play for the 1200, kind of a level, which it could very well, hit in the coming sessions. But as I said, the bulk of the gains are perhaps made, at least in the near term. What's interesting is Mahindra and Mahindra. The stock's seen, a bit of a knock, but then has had a gradual rebound. It's almost forming what we call the ascending triangle formation, which suggests that once it has this move above 2940, 2950 kind of zones and then closes above that, then, the momentum could pick up, the stock could run higher. So I think, Mahindra and Mahindra, after this gradual and steady up move over the last, 8-10 odd sessions, perhaps could see momentum pick up. So that's the one that I have on my radar. Maruti, also an interesting setup, but every time it goes to that 13,000, 13,200 mark, sees a bit of a sell-off. So I'll just wait and watch, if this 13,000 level is indeed taken out in a more meaningful way. So Maruti is a wait and watch. Mahindra and Mahindra is a position that you can consider going long on.
Okay, so those are some of the auto counters that Kush has on its radar, and I want to come to Mayuresh also on his view of what he thinks about autos. But before that, let me go across to Mahima, because you have now some views coming out on the earnings per share estimates of few companies following Q1 results. So we're not quite done with the whole Q1 cycle yet, Mahima, but I think enough data out there to have a view on what Q1 is look like.
Right, Tamanna. So just to give you a context, around 19 Sensex companies, 24 Nifty companies, and around 664 mid-cap and small-cap companies have come out with the results thus far. And two interesting brokerage notes which have come out with a review, in fact, of how the earnings have panned out so far. Well, Citi says that Q1 for 48 out of 100 BSE 100 companies are largely in line with the estimates that they had, except for the OMCs. What they're saying is that EBITDA and PAT growth are at 7% YOY, and what they're also saying is that industrials have delivered earning beats, and energy is something where there are key misses. And lastly, what they're saying is that June 25 Nifty target is at 24,400 and it's trading at a multiple of 19 times. They've also given some key underweight and key overweights. Key underweight are PS utilities, defense, industrials, and banking and insurance. And the key overweights are consumer discretionary, IT services, and metals. They've also revised their EPS estimates for certain companies. Major upgrade is for Interglobe at 17%, followed by PNB again at 17%. These are the revisions that they've cut down. JSW by 37%, BPCL by 14%, Ultratech by 8%, and so on. We also have a very interesting MS note. They've also come out with a review for earnings that have come so far. They're saying that marginal beat on the top line for most of the companies under their purview, of course, and they're saying that margins have expanded for 3 out of 8 of the sectors that have reported the numbers so far. And industrials, gas utilities, consumer discretionaries, and tech is something where they've seen earnings beat. And they're saying that technology is something where they're seeing that there's some kind of miss as per their expectations. Lastly, again, even they have revised earnings EPS for certain companies. Ashok Leyland, Coforge, Interglobe, all in positive, 7 and 5% respectively. And some companies where they've cut their EPS estimates is IDFC First. They've cut their estimates by 21%, Signed by 15.5%, and SBI Cards by 11.7%. So this is the overall view of what brokerages are saying about the earnings that have come so far.
Okay, so most seem in line, but not runaway earnings in Q1, one would say. Of course, we'll have to wait for all the numbers to come in for the complete picture. Thank you so much for that, Mahima. Chandan Taparia joins in now. He's head technical and derivatives research at MOFSL. Very good morning, Chandan. I'm not sure if you want to comment on the SEBI, proposals, but I'm very keen to know what you would think. And then, of course, yes, how do you see the indices this morning?
Yeah, I'm okay to comment. Yesterday, I was in person, met SEBI chairperson and understood all the enhancement which they want to do for the welfare and for betterment of the retail public. So what I noticed that she was worried, or regulator is worried that more than 50,000, 60,000 crore of household income is being deployed or lost due to the options trading. So they came out with some 6 to 7 measures. And if I just explain them, the important part is that now one exchange, one weekly expiry will be there. So NSE has to decide whether they will go with Nifty weekly or Bank Nifty weekly, and BSE has to select whether Sensex or BankX. So good part is that we are in the world of every day is expiry day. That will reduce to only particular 2 days on the weekly expiry. Second part is that now the FNO lot value will increase. So as of now, the Nifty lot size is 25. And if I look at the price of the Nifty at 25,000, the lot value goes to 6,25,000. And they are looking to increase by 4 or 5 times. So accordingly, the lot size will increase from 25 to 100. So because of that, your initial margin will require more. So negative for the people who are trading in the future. Again, the writers will get the hurt, but I don't think that will somehow significantly affect the option buyer, because option buyer will take the 100 quantity, or to reduce the risk, they can go with out of the money strikes. And then important part was the reducing the margin benefit for the calendar spread. Those who are selling and buying in the current weekly expiry and then doing buying and selling opposite of the next weekly expiry. So that kind of benefit will reduce. So ultimately aim is how the regulator can demotivate the retail participations, which is growing rapidly in the Indian market. If you look at the comparative analysis, as of now, the 1 lakh crore ADTO, average daily turnover, is there in the Indian equity cash market. But in FNO, it's more than 400 times. So it's growing rapidly, and regulator has to do the right thing so that retail public don't lose significantly. So ultimately, they are trying their measure. It might demotivate participations, but I don't think these measures are sufficient. I think they need to look more on the such criteria. But yes, this is the buzzword. And I think somehow most of the brokers and traders need to redesign their strategy to participate in the derivatives market.
Right. Gentlemen, stay with us. We'll take a break. We'll come back, continue talking to our analysts about the day ahead and, of course, track pre-open as well. So stay tuned.
Welcome back. You're watching India Market Open. Less than a minute left for the pre-open session to begin. Chandan, let's quickly get your top picks of the day.
Yeah, so I'll focus on the oil marketing company. We have seen breakout and momentum in most of the oil marketing company. We have seen the build-up of long positions with surge in the volume, which also indicates that this momentum could continue. We have seen good run-up in HPCL, BPCL and IOC here. I'll suggest to go long in IOC, which has given a consolidation breakout on the weekly chart. And this consolidation breakout is happening after the long 23 weeks and expecting some short covering trigger as well in the counter. So recommending to buy on IOC, that is Indian Oil Corporation, with a stop loss of 180. And here we have a target towards 192. One more trading idea, I'll focus on selective chemical names which were earlier underperforming. And what I noticed in last 3-4 days, most of the chemical counter, including SRF, Aarti Industry, Atul and all, started to witness some buying interest. So I believe some margin of safety and renowned or support-based buying could be there. So one can buy SRF given the price breakout and build up of long position with support of 2490, and here we are target towards 2680. One more trading idea I want to explain. There is a known FNO, buy on KNR Construction, which has given a breakout from its pole and flake pattern on the weekly chart. We have seen a surge in the delivery volume with decisive close above 400. So one can buy with support of 398. And here we have a target towards 425 to 430 zone.
So meanwhile, pre-open session we'll wait for it to settle. I mean, Nifty is obviously going to settle in there, has opened above 25,000 in the pre-open session. We'll see where it goes. And once again, I mean, that's the kind of number that puts a smile on your face, but was expected. So doesn't really move the needle. Nevertheless, the Nifty's had a good start. Mayuresh, let me just get a quick view from you on, where you're seeing pockets of value right now. I mean, let me come to PSEs. Public sector companies have been out of favor for a bit, really recovered in the last couple of sessions. Are you seeing more momentum there? Is it something that you want to look at right now?
Morning, Tamanna. So I think within this space, obviously depends, power counters are back in flavor. But to our understanding and how we see it on charts at Markets with India, PSU banks still remain in a comfort zone, both from a valuation perspective and expectations of an earnings recovery as well. So to that extent, I think a lot of these mid-cap PSU banks have delivered a decent set of numbers. The expectation and the larger picture now, Tamanna, is how deposit mobilization trends will take place over the next few weeks, the next few months. The overall picture in terms of advances growth looks decent. The expectations in terms of the provisioning on their balance sheet, the asset quality looks decent so far as well. And therefore, I think the kind of recovery numbers that the banks are talking about and expectations of strong mobilization, I think the mobilization drive has started in real earnest for a lot of these PSU banks. And they have been told to focus on the core banking business itself, which itself is a very, very good sign. So to our understanding, selected PSU banks within the mid-cap space should do.
Okay. Bring up Naveen Fluorine. I wonder if the first 2 minutes of the pre-open are already showing the expected downtick on those numbers. Just about a couple of percentage points for now. Let's see if there is more in store. But suffice to say, a bit of a disappointing quarter, if you will. Brokerages have been downgrading the stock, but certainly a bit of a disappointment there. Chandan, good morning. Any thoughts here on Naveen Fluorine? And if not on Naveen, then on some of the other spec chem stocks, all of which have had a very strong run up in the recent past few days.
Yeah, so if I talk about the Naveen, so major trend is turning slightly to positive to range bound, and already I discussed about the SRF in the same segment. If you look at the Naveen fluoride, it has recently taken support at its 50-day exponential moving average. Earlier, 3,500 used to be a hurdle, and recently it has worked as a support zone. So I believe with higher base, if it declines towards 3,700 to 3,650 zone, one can accumulate for an upside move towards 3,950 to 4,000 zone. And in this space, I'll focus on the SRF, which has given a consolidation breakout, doing well from last 4 days. So one can buy with support of 2,490 for an upside target towards 2,680 zone.
Chandan, a couple of other stocks that reported solid earnings, and we'll of course go to Mayuresh as well for a fundamental view on that. Torrent Power, fantastic earnings. GAIL, very strong earnings. Macrotech also has done quite well. I know they're not, in the same breath, but what do you make of these three? Anything that you would go constructive on this morning?
So I'll pick two names, Torrent Power and GAIL. If I start with GAIL, that is Gas Authority, it has been making high tops, high bottom. And I noticed that from last almost 88, 90 days, it has been holding well above its 50-day exponential moving average. However, the beta is lower, so momentum is comparatively less. But the trend is positive, and we have noticed that every small decline is being bought in the counter. So as of now, till it holds above 225 zone, overall, the bullish bias could continue, and the stock has potential to rally towards 250 zone. Now, talking about Torrent Power, here we have seen some positive to range bound bias. Recently, it has taken support at 50-day mark and turned higher with level of 1450. However, we have multiple hurdle above 1620 zone, but a decisive hold above 1600 could open the upside. So with support of 1550, we can look for an upside move towards 1690 to 1710 in the Torrent Power.
Okay. Well, just before I go to Harsh, just want to bring up that Jeffrey's note on the brokerage SEBI proposals and the impact thereof, because some of the stocks are moving around. So remember, that note suggests that stocks like Nuvama might get limited impact but have a second order impact, but exchanges could well have a major impact. So Nuvama is flat. BSC, the stock should come up on your screen. Angel should come up. 5 Paisa should come up, Motilal Oswal should come up, and we might well see some bit of reactions on these stocks. Angel one is down 2.5%, 5 Paisa down 2%, BSE down 2% as well. So some of these stocks are certainly getting impacted. So do keep an eye out for them. All will not see a uniform impact. Some of the insti-focused brokerages might not even see an impact, maybe a sentimental one, but this is something you've got to watch out for. But speaking of brokerages, Harsh is here with a brokerage view on from Nomura, I believe, Harsh, on car trade, is it?
Well, yes, Niraj, it's Nomura on car trade. What they've done is, while they've maintained their buy rating, they've hiked their target price substantially. Mind you, numbers, of course, is what car trade came out with, and very strong ones, that too. You're seeing substantially in terms of revenue, the numbers ahead of what estimates were looking at. 64% growth on the top line, 3% ahead of Nomura estimates. PAT 2 up 50% above Nomura estimates, coming in at 29 crore. And you've seen the net cash position as a result ballooning to 780 crore now. You're seeing good show across segments. PAT growth largely, or PAT beat largely led by the EBITDA beat that the consumer business has posted. Consumer standalone revenue was up 18% year over year, but margins at 19.8% versus the sub 11% which Nomura had expected in terms of that particular business. They've maintained their 20% CAGR with regard to the revenue growth over the next 3 years. That's Nomura, of course, FY 25, 26, 27, 20% CAGR is what they're penciling in on their top line. With regard to, though, the margins, they're expecting OLX to contribute substantially better margins than expected. So they've hiked the margins slightly on OLX. Asset-light model likely to aid margins going forward, plus operating efficiencies starting to kick in. That will aid the numbers overall. 25% EBITDA CAGR expected, with a further scope for upside possibly. So they'll keep their eye out on that. The EPS adjustment as a result of this time's very strong earnings beat is 10% for FY26, 5% for 10% for FY25, 5% for FY26. And on the back of that, that major increase in target price from 982 to 1112. Right.
Thank you, Harsh, for that. That's a few brokerage calls coming in this morning. A quick check on how some of this earnings reaction is doing. RR Kabel, weak numbers. The stock should be trading lower. Tata Consumer, mixed bag. That stock 3% low on RR Kabel is what we have. Macro Tech, Tata Consumers, Gale, Torrent Power, Dixon are some of the companies that reported. Mayuresh, with a whole bunch of earnings that were reported between closing and opening this morning, what stood out for you? Anything that you liked, that you saw, that you would consider strategically adding to your portfolio?
So I think Torrent Power gave a good set of numbers, and it's got a good mix in terms of both the LNG assets that it's got. One of the assets, DJN, which has a 1200 megawatt capacity, has still not got any tie-ups. So there is every hope that if there is a tie-up on this particular asset that they probably own, there can be even a substantial improvement in numbers that they keep on posting. And at some point of time, the tie-up should happen, looking at the energy scarcity that India is probably looking at. Dixon also, in my opinion, posted a decent set of numbers yesterday. And therefore, I think from earnings perspective, specifically over the past day or so, I think Torrent and Dixon probably stepped up.
Okay. Well, so 908, and by the way, the dreams of 25,000 seem to have just subsided
evaporated,
a bit.
Eviscerated. Completely. I'm looking for new words of this dream of 25,000.
Punctured by the wildfire of Vagar.
Okay, yeah, you're an HOTD fan as well. Okay, so 25,000 perhaps distant dream today, but we have 5 minutes left for opening. Now the question is, how do you play this market? Very quick calls looking at the pre-open action from Kush and Chandan before we get in. Kush, you want to revise some of your top calls this morning, or add anything there?
Yeah, I'll take the latter option. I'll add NLC. India is a stock that we discussed, on the closing show as well yesterday. I think, it's giving a pretty steady opening of about 0.75% higher. I think you can hold on to this one, or maybe even make a fresh entry. 315, 325 are the targets. And on the downside, 285 is a good support zone. So the risk reward ratio is quite favorable.
Chandan, what about you? Anything that you want to add, build on, or replace?
No, we all spoke about positive on the IOC, SRF, KNR construction, and I'll continue with the same. And talking about Nifty till it holds 24,600 zone, I'll continue to be with buy on decline stance and looking for a fresh lifetime high of 25,000, 25,250 next 1 or 2 days. So continue to be with bullish bias of the market, and as the market open, we need to go for stock specific action.
So 1 or 2 days for the 25,000 mark is what Chandan is saying. Just wanted a quick word on Adani Energy. I was wondering if you had any view there, Mayuresh. They're coming out with the QIP. We've seen quite a bit of action pre-open session, about nearly 3% up on the stock. Do you have a take?
So I think step in the right direction because they're chasing growth, and for chasing growth, they will need this capital raise to probably come through. They're also into smart meters. They're also into the mobility business at this juncture, and also probably getting into energy storage solutions as well. So I think it might be a complete package as things materialize over the next few quarters and years for Adani Energy. The only angle, Tamanna, again, for most counters within the space is valuations.
The thing about Adani Energy, though, I mean, and supposedly very strong response to the QIP, is also that this is probably one stock from the pack which hasn't had a meaningful rally relative to some of the others. So could we see that happening? Doesn't mean that a stock which has not rallied has to rally, but just relative to the others, this one has been a bit more sedate. Kush Bora, and by the way, viewer standard disclaimer, Adani Group owns Adani Energy, and you're watching NDTV Profit, which is owned by the Adani Group as well. But Kush Bora, a question to you on Adani Energy. Showed spunk yesterday, up again in the session today. Is there a trade here?
There is, because there's been a long consolidation period, and now the stock's starting to move higher on the back of good volumes. There was resistance around this 1,075, 1,100 mark or so, and about 1,075, 1,100. We've moved higher from there. I think on a positional basis, the targets here are 1,225, and once that is taken out, perhaps even a 1,300. So these are the levels, at least for the near term, that one can consider. Moved above resistances with good volumes. Keep your stop losses around the 1050, 1075 mark, which were the resistance zones, and now will start acting as a support zone. So yes, a long trade is warranted. 1,300 is the target.
That's Adani Energy for you. Remember, the company has launched a QIP with a floor price that is set at 1,027 per piece. SBI Cap, Jefferies, and ICICI Securities are the lead book running managers, and also Cantor Fitzgerald has been appointed as an advisor in connection with this issue. But moving on from Adani Energy, Chandan, a few more that are going to be catching attention this morning could be auto stocks after yesterday's big move. Anything in the auto pack that you still like? I mean, Tata Motors, 4% gains in the session, and also a bunch of brokerage upgrades on the oil and gas pack. So anything else between auto and energy that you like?
So in auto, we have seen good run-up in Tata Motors. The entire chart re-rating was visible after the breakout above 1,050, 1,030 zone. And I believe this momentum could continue until it holds above 1130. Ongoing move can take the Tata Motors to us 1220 kind of level. I believe Maruti could be a fresh breakout zone. It has been struggling to surpass 13,000 marks from last almost 70-75 trading session. And decides to hold about 13,000 could open the 5 to 8% upside. So Maruti could be on radar with support of 12,650, and it can head towards 13,500 to 14,000 marks. Now talking about OMCs, we have positive on the IOC, HPCL, BPCL. We believe the breakout could continue to get the follow-up during the day.
Okay, so positive on all three OMCs, and remember they're in a bit of a surge because we saw that uptick in trade yesterday as well. Despite HPCL's rather sedate quarter, but strong moves yesterday as well. But here come the rates this morning. And are we closer to 25,000, not by a country mile really, actually not so much also, but it's a very flat start to the markets today. Banks flattish as well. Bring up mid caps and small caps very quickly and just see if that bout of outperformance continues. Yes, it does. 0.5% for the mid cap space. Reckon the small caps too could be having a good move. Not as much, but about 0.25%. Bring up the heat map and show you what's moving on the large caps at least. So there is some bit of strength in metals today. Hindalco, Tata Steel, both of them, JSW Steel too in the green. So those three are doing okay. Adani Ports is in the green. There's strength in M&M ahead of the numbers. Adani Enterprises in the green as well. I think focus will now shift to Adani Enterprises and green as being the other two fundraising candidates, if you will, after the Adani Energy's success, presumably successful QIP. But a lot more green, very little red. What is in the red? Tata Consumer. A quarter exactly in line with estimates. Maybe that is the disappointment. Let's see. It may recover as well. Some bit of weakness in Axis Bank, but aside of that, nothing too much. Just 0.25% for the others. So the day belongs presumably to metals and the auto names, because I see a Maruti, M&M, at least the two of them in the green ahead of the numbers, Tamanna.
Absolutely. So that is where the action is. Maruti really, showing some speed there in the last few seconds or so. Let's look at what the broader markets are doing today after, sort of middling away for most of the week. And you see that continue. Mid-cap 150 mildly in the green. Nothing too exciting happening there. Likewise for the small cap, but they are in the green. So the focus, like we're seeing on the Nifty side also, is on results upcoming and gone by. And it continues in that vein in the broader markets as well. So just let's look at how some of those companies are performing that had results coming overnight post-market close yesterday. So RR Kabel, Titagarh, Navin Fluorine. I'll start with I would say the ones which were not too positive, and all of them hurting. Titagarh Rail the most out of that pack. Remember, profits down, margins down on Titagarh Rail, a stock which has seen quite a momentous run up, and the pain point there showing 5% down on that. RR Kabel also very disappointing numbers, but stock 2.5% down. Likewise for Navin Fluorine. On the positive side of good numbers are Dixon and Gale, a couple of them that you could see. Maybe I would add a Zaggle to this as well. And Gale really responding well. Gale had a very strong set of numbers. Dixon saw a bit of a margin squeeze, but their mobile EMS segments have gone up massively. Revenues have gone up, be it on all sort of parameters. Zaggle also has had a strong set of Q1 numbers. That stock up about 3%. Now, what's happened with the SEBI proposal impact? We've been talking about this all morning and seeing if there is kind of an impact. Look at BSE. Look at BSE, the stock up 1% after opening. Your Angel One, 5 paisa, seeing a bit of hit. But, there's a saying, the house always wins. So in this case, perhaps it is the Bombay Stock Exchange. Will there be a hit on volumes? Maybe not to that extent. Anyway, BSE definitely responding well this morning. Just Power Grid is another one that I want to pull up. They had a clarification yesterday after their run-up that the report on their 40,000 crore undersea connection deal in the Middle East is incorrect. That was something which had seen the stock price run up a fair bit for the first half of the week. That clarification has seen some of those gains cool off. So these are some of the, key drivers from the pre-open session that we should keep an eye out, but a lot more action, one presumes, Samina.
Stock of the morning, Tamanna, has got to be Torrent Power. It was up 7% when I checked a few minutes ago. It's off the day's high point, but still eking out a very strong up move in trade, 6% on Torrent Power. Their profits have zoomed 88%. So on back of that, you're seeing a sharp response to Torrent Power. Mayuresh as well pointed out that he liked what he saw with Torrent this quarter. The stock looks good with a 6% uptick. Suvain Pharmaceutical is up 5.5%. Gale, you've already mentioned. Dixon is also doing well. It's off the day's high point, but still trading with a sharp up move. Suzlon continues to gain for the 5th straight day. Big gain there. Post its earnings last week, the stock has been on a one-way trajectory. 2.5% on Suzlon is what we have. Walchand Nagar is doing well. Upper circuit on the stock. It's up 5%. HCC is also having a positive morning, up 2.5% as we see it. Macrotech Developers posted a solid quarter. The stock is getting a thumbs up. 2.5% higher is what we have. Suvain Pharma also looking good. That was the other counter that's looking well in early hours of trade. Adani Energy Solutions expectations on its QIP news, is trading with a gain of 1.5%. IEX is up 2.5% as well. 361 WAM reported numbers that were a clear beat on street expectations. The stock, despite all the news around the industry, is trading with a gain of 3.5% in early trade. So good going for all those counters that I've just mentioned. You've also got Granules that are up 5%. So we'll talk to the management to get better perspective there. Colgate-Palmolive reported solid earnings yesterday. The stock had it pleasant. This morning too, no different. Continues to see an up move of 1.5%. Castrol India reported numbers. A quick check on how it's doing. You also had Aegis Logistics posted that Castrol is down 2.5%. Numbers were okay, to say the least. PTC Industries is down 6.5% as we see it. You've also got Aegis Logistics. Weak numbers. The counter gets a thumbs down. 3.5% lower is what we have. Vari Renewable and Star Health were the other two counters that reported earnings. Star Health had a good quarter. Let's see, the market is giving that a thumbs up. The Vari is down 5%, so having it quite rough post its earnings reporting, and Star Health, despite good earnings, trades about 1.5% lower. A quick other one, Johnson's Control Hitachi, Niraj had pointed this out too in the morning, came in as a big surprise. Strong earnings, but stock's down 2%. This is interesting. The market seems to be rewarding what it believes it likes, and of course not rewarding what it doesn't like. Tata Consumers as well, case in point. Good earnings, market gives it a thumbs up, and a whole bunch of the other ones where the street doesn't seem too pleased as we see it. But all in all, the few that are doing well are doing very, very well. Suvain is up 9.5% and Torrent is up 6% this morning. Kush, have you spotted anything in early minutes of first sticks? Any intraday trade that you have for our viewers?
Sure. Samina, first a quick update on the morning call that we discussed. KFin Tech, we discussed this one with the first target of 850 and the second target of 880. Strong opening and moving higher from there on. Very close to the first target. If someone's missed out on the trade early morning, then I think you could still get into this one for the second target of 880. Just that you have to bump up your stop loss to about 820 now. That's a quick update on the stock we discussed in the morning. One stock that's actually holding my attention for a couple of days now turned into a trade is Gland Pharma. This stock had a round of profit booking and then again steadily moved higher. Resistance around the 2075 mark, but comfortably taken that out as well and moving higher. So I think this is one trade that could set up nicely for the next coming session. Immediate targets are 2150 and then 2200, and on the downside you can place your stop loss close to 2020 levels. So Gland Pharma, something that you can still consider intraday, perhaps even for the next coming few sessions.
And then I believe we're short of time with you, so two very quick questions, one from me and I guess one from Tamanna and Niraj as well. Tata Consumer, numbers in line with street expectations. Do you anticipate an intraday recovery? Could that be an intraday call from your end?
Yeah, so I think let it correct. I don't believe that we should be in hurry because the stock has been making lower top, lower bottom from last 4-5 days. So I'll look for a downside move and let it get stability near 1145 to 1150.
Chandan, how do you see Suzlon? I mean, it's been a sort of a one-way move for the last few sessions.
Yeah, we have seen the breakout just a couple of days back, and after that it has been making higher tops, higher bottom from 54 to all the way to 70, 71. I believe the trend and momentum is clearly on the bullish side for short term. So one can continue to ride, but yes, high volatile names, so need to keep the support near 67 and look for an upside really to extend to a 75 to 77.
For a stock that was completely written off 3 years ago, Suzlon is at a market capitalization of 95,000 crore rupees. It's just insane what's happened to some of these stocks, but particularly Suzlon. 95,000 crores.
Time Aiga has happened.
Yes, most certainly.
For Suzlon. I don't know if Mayuresh has a quick fundamental view on Suzlon.
So Tamanna, the fortunes have definitely changed for Suzlon. And they went through a periodicity of, they went to torrid times, right from 17, 18 to almost 21, 22 till COVID got over. And then the regulation changed and very few players survived within the listed space. So I think Suzlon, Inox Wind, a few companies where the regulatory changes, expectations of more order wins coming their way, the interstate charges, which are far more rationalized right now, probably also gives some element of impetus. But yeah, as Niraj said, I think insane move in terms of what has happened in the last 2 years.
Okay. Chandan Taparia, take a moment to thank you for joining me today. Really appreciate your time this morning. Thanks. Okay, some stocks which are moving up. Kush, from the stocks that you gave in the morning, I think HFCL is the one which is starting off the blocks, but just about 1% higher. Still merits a trade?
Oh, most definitely. In fact, unlike KFin Technologies, which has now gone and hit the first target, this one's actually kind enough to give an opportunity for viewers, traders to make an entry. But I think HFCL, even from a positional standpoint, you can buy and hold for much higher targets than what I shared. But from a near-term perspective, yes, still just as confident as I was about say an hour ago. 141, 146 targets still intact, 130. Or maybe you could perhaps now bump up the stop loss a little bit just to protect your risk reward ratio. So you can now move your stop loss up to 132. But other than that, the view and the target still intact.
BSE, by the way, is a surprise mover simply because everybody thought that exchanges will see a bit of a downtick today. Bombay Stock Exchange is up 6%. There was one contra view which said that maybe some of these anomalies, if they get corrected, might actually, and consolidation happens, might actually help volumes for BSE particularly. And I think we're probably seeing that, but 6% up on BSE.
Also, I think, Niraj, it's NSE that has 4 weekly expiries. BSE just has 2. So maybe it seems to lose lesser than NSE, which is in the unlisted space any which ways.
Yeah.
Because you've only got Sensex and Bank Nifty for BankX. But
they said that
BSE.
if the BankX goes away, because they have to keep one, then
I think
that could be 7 to 9%
yeah.
EPS impact. But we're not seeing that on the BSE stock today.
So you think BSE is moving relative to the NSE hit?
We'll have to check what the unlisted price of
impact.
NSE is going to be in the next few days.
Yeah, so more than any real impact on BSE itself. I mean, I think that's interesting. Mayuresh and Kush still with us. So I don't know, Mayuresh, are you surprised with the kind of move that BSE is showing this morning?
Probably yes, but yes, I think I would supplement Niraj's point. BSE had two expiries, NSE far larger expiries. If it's going to be one expiry, 1 week, I think the volumes might not get impacted as much for BSE as much as it would for NSE as well. There would be some marginal impact, but I think BSE is also getting shielded in terms of the annuity business, expectations of more listings coming their way, a lot of paperless transformation that these guys are also going through. So yeah, I think one leg of the argument stands in favor of BSE.
Okay, Titagarh is the one which is sulking big time today in trade, down about 5% after those numbers. And Fine Organics yesterday after moving up 9%. I think today a clutch of these chemical stocks are taking a bit of a breather. Fine particularly was not a very fine set of numbers, was very flattish. But Fine Organics is certainly coming off. Not a very liquid stock, but Titagarh certainly. So Kush Boda, one question to you. For somebody who is invested in Titagarh Rail, should one book profits if one is sitting on profits? It's down 5% right now.
Yes, the stock's actually given this breakdown, and it's holding on to the 50-day moving average, which is close to that a 1550 kind of zone. Any break below this will actually open floors for much lower move, closer to perhaps even 1400, 1475, broad range, but somewhere close to those levels. So I think if you are still sitting on any kind of profit, then you should take some money off. Even if you aren't, I think it's a good idea to exit out of this one. If this key support zone is broken, then it could see an acceleration on the downside.
I've got a whole bunch of stocks that are moving. Mayuresh, M&M and Maruti report today. Tactically, would you have a call on these stocks before their earnings?
So, Samina, as a disclaimer, we continue holding both the stocks in our global portfolios. The expectations in terms of volume numbers still expected to hold out. Obviously, I think from the base effect that we probably see for this year, they might not compound at a decent rate. But again, the order book that both of them have at this juncture is good enough. For M&M in particular, again, I think the farm equipment part of the business, which is the tractor business, expected to pick up steam. Obviously, the kind of portfolio that they possess, tractors below 50 horsepower, it's very, very relevant in conditions as well. And therefore, this is expected to contribute significantly as we head into the next few quarters. The supply numbers in terms of how they're going to manage demand is also expected to tick higher. And therefore, I think with expected supply constraints going off, there should be some element of saliency as far as numbers are concerned. So not too much perturbed in terms of what they'll report in this quarter. This year might be a little bit on a softer side year on year, considering the higher base. For the next 2-3 years, with more products expected, expectations of stability in margins should offer well. So we continue our hold rating on both M&M.
Okay. All right. So M&M and Maruti on focus. Maruti has been zooming through the morning session. Let's see if it's held up now. Some of those gains have been given up for sure. Mayuresh, Kush, thank you so much for joining us this morning. Now, before we get into the break, I just want to quickly address those flashes you're seeing on your screen. Bank of Japan has raised its policy rate to 0.25%. That is massive because the expectation was that they would firm up their rate at 0.1%. Their current interest rate range upper end is 0.1%, and it was widely expected that they would bring it up to 0.1%, which would be the highest increase in the last decade. So 0.25%. And the rate being raised to 0.25% is definitely going to be a big surprise. The Nikkei is still in the red, but seeing a recovery from its lowest levels of trade in this session at least. So that's a big one. And remember, we're looking at a whole host of central policy action.
So the flash on your screen, the quantitative tightening plan that was to be anticipated, because remember, BOJ wants to unwind the decade-long stimulus that it has been on. And I think the Japanese government bonds buying to be 3 trillion yen in Jan to March 2026, long dated, so a bit of a gradual path given, but yes, tightening significantly and the number being laid out as well. You would argue in line to marginally more hawkish, if you will, than or more tight than what was anticipated. Interesting. We'll certainly see some reaction on the dollar yen. We may not be able to show it right now, but I would suspect that the dollar yen would have reacted.
Yeah, so you'd see a reaction on the dollar yen. You would also see, I don't know, we'll have to wait and see, of course, what comes out from the Fed as well. But interesting times. The BOJ completely, surprising on the upside with its rate regime is definitely a big story this morning. Anyway, we'll take a very short break, but stay tuned. On the other side, we're joined by Krishna Prasad Chigurapati. He's the founder and chairman and MD of Granules India. Stay tuned for more.
back. You're watching India Market Open. Stock of the day yesterday was Granules and continues to be on the buy side this morning. The company has delivered numbers that have beaten street expectations on pretty much every front. Krishna Prasad Chigurupati, founder, chairman and MD of Granules India, joins in. Hi, Mr. Chigurupati. Thanks a ton for taking out the time to talk to us this morning. It's been a significantly strong quarter for your company. Walk us through what went behind such a solid performance. Top line's also done well, revenues have improved, margins have jumped up significantly. Is that largely on back of how well the formulation business has done for you?
You're perfectly right. It's the formulation business. The share of the formulation business, the entire revenue has gone up to 76%. It was about 55% 2 years ago. Last year it was 65%. And as per our plan, we actually plan to shift all our APIs and PFIs into FDs. We are on track, and that's what has really contributed to the growth in profitability.
Break down your top line for me. I know API, paracetamol API continues to witness a decline and formulation continues to see an up move. Break that down for us, and also going into the rest of the year, are you anticipating the contribution from your formulation business to grow? And if yes, what sort of a number are you looking at?
Formulation business, as per plan, will continue to grow as we go forward. And ultimately, we may end up at around 80% or 82%. Coming back to the API and paracetamol, this year, actually from last fourth quarter of last year, paracetamol situation has been very bad. All our customers abroad have overstocked and they have inventories for to last them another 6 to 8 months. And also in the last 1 year, a lot of new capacity had come up in paracetamol, anticipating a huge demand, and there's surplus capacity and no demand. So it's very bad, and I think it's going to take at least 2 to 3 quarters for paracetamol to rebound. So meanwhile, the formulation business and other APIs, actually other formulations, the core products used to be about 90% few years ago. Today, they've gone down to 65%, and other products have come to 35%, which is a good growth in our basket. And this is what is helping us in keeping up our revenues in spite of a debacle on paracetamol.
Mr. Chigurupati, very good morning. Tamanna here. So, like you said, your formulations business has sort of offset the paracetamol pain. You've seen a growth of 65% year on year. Do you see it sustaining at those levels? What is the outlook for formulations, even while you're expecting some time to recovery for the paracetamol side of things?
Good morning, Tamanna. Formulations will continue to grow. We have been filing a lot of products in the US, Europe, and across the world, and it will continue to grow in absolute numbers. There will be a decent growth. As a percentage, like I said, it could plateau at 80%, 82%, because we do have a fairly sizable business on PFIs. And APIs, of course, we do make a lot of APIs, but all are consumed in-house. We don't sell most of the APIs outside. So to answer your question, the formulation business will continue to grow.
What about your oncology products? I'm just trying to understand. I know they come on board in FY26. Is that going to be sort of the game changer? Can you give us a bit more detail there?
We have entered a new phase, Tamanna. Onco is one of those areas. We have a lot of P4s, first to files, and first to launch products. And the game has changed for us. We were always in P3s. Now we have entered more challenging areas. And onco, we have a few molecules which we expect could really change the course of Granules. It's still some time away, 27, possibly 26, 27. And some of these patents will expire in US in 30 or 29. So there's a lot of products like this, not only in onco, where we have many interesting P4s, and also some products where we have created our own IP, and others may not be able to get into these products.
What do you mean when you say change the course, Mr. Chigurupati? I'd love to understand what the trajectory could be if it indeed materializes on the timelines that you mentioned.
To change the course, we were focused mostly on P3s, large volume products, and this will continue to be our core. Instead of 5 products, we may have 15 products in the large volume category, and that will keep our foundations very, very strong and continue to throw up cash to fuel our aspirations in other areas. So there will be a sizable contribution coming from these new products. Today, we would not be able to say what percentage, but definitely the profitability on these new products where we have patent challenges could be very different from what we enjoy today.
Would love to understand the slightly longer picture. 2 years ago, the belief was that there will be some bit of a stake sale that could happen in Granules. I remember last quarter or the quarter before last, you came in and vehemently denied it on our channel and said that the outlook is so strong that I don't want to sell anything of my company. Would love to understand, is that strong outlook for a 5-year period a 15% growth CAGR? Is it a slightly higher growth CAGR? Give some color.
Now, selling a part of the stake, let me explain. Definitely, there's no plan. But if you have observed a few months ago, I sold a small percentage just to get rid of my debt and also create a little liquidity for myself. Now that I've done this, absolutely, there's no need for a very long time to even think of selling the company. Now, the second question, Niraj, sorry, I just missed it out.
No, I was asking, so you didn't think of not selling the company because you may be happy with a 5% CAGR growth, right? I think your ambitions are bigger. So would love to understand that if I look at Granules from now, over the next 5 years, what is the growth aspiration, sir?
Okay, let me explain. For the last many years, 15 years, first 2 5-year periods, we were growing at more than 20%. Only last few years, there was a little drop. And I'm very confident, and we are aspiring to get back to our 20% CAGR. Anywhere from 15 to 20%, we should be able to do this going forward.
Right. You want to just talk to us about the next couple of years, right? Like you've already mentioned the sort of growth you're targeting, Mr. Krishna. But break it down for us. What verticals? I know North America has done exceptionally well for you this quarter. Last quarter, you've talked about how you want to increase your footprint in markets across Europe as well. Where and how do you expect those geographies to play out for you looking ahead?
US will continue to be our primary focus, and it will continue to be our major market. While Europe and other places grow in absolute numbers, as a percentage, they may not really make a huge difference. I don't think Europe will ever go to 40% of our revenues. US will continue to be there. And when we look at the breakup of different segments or verticals, Onco is going to be a big area going forward. And then there are a new set of products which are in the core area of the old type of business, which are high volume products, P3s, which we have already got approvals, we have launched. Now we are manufacturing those APIs for ourselves using differentiated technologies like enzyme and flow. We believe we are going to have a great advantage on cost of APIs, and that should be a game changer. And there are also a few products where we have made a differentiated technologies in formulations, which also give us a good advantage. That's in the P3 segment. Now coming to patent challenges, we have a range of products that where we have very innovative formulations. And we not only were able to challenge the patents, existing patents, but we believe that we have created our own IP, and it may be possibly difficult for other people to follow us there. And another segment is the US business itself. We manufacture products in GPI, our US subsidiary, and we concentrate mostly on CNS and ADHD drugs. And these products are really growing in demand, and we see that that is another area that will drive our business. And fourth is our OTC private label business. This has been growing very fast. We supply to all the chain stores in the US, the OTC molecules, and we have been having a 30-35% growth in this area. Of course, the base was small, and that continues to grow. These are the 4 areas: API, efficient API manufacturing, new support feeding into new launches, ADHD drugs in US, OTC. These are the areas, and finally the P4 challenges, which will get us into a very challenging and exciting area.
Right. So we'll continue to talk about business, but quickly you mentioned, Niraj, that you had sold a little bit of stake to retire personal debt. The debt on the books of the company is close to 850 crores. It's up from the 600, 700 odd we'd seen in the same quarter last year. Any plans to retire debt, or you're comfortable at this debt equity ratio?
We are comfortable. I think we are at 0.77 debt equity ratio. and we are comfortable up to 1. I think I've always been consistent in saying that 1 is the limit. We will not cross a 1, and anywhere below 1, we are quite comfortable. We have no plans to retire debt. We would like to grow rather than retire debt.
Just wanted to get a better sense of what's happening in the US market. Obviously, a big contributor to your revenues. Is the kind of price control that we're seeing there a pain point that you see escalating for you, Mr. Chigurupati? And what is your outlook on the kind of growth that will come from US?
US price erosion has always been challenging.
But it's worsened. It's worsened in the recent times. That's why I'm asking how you look at it. How much of a pain point is it?
I'm not sure if it has worsened in the last quarter, 2 quarters. It's sort of stabilized. It's not very high, maybe mid single digits. That's what it has been. But even when it was much higher than that, we were always constantly improving our efficiencies, manufacturing excellence. We were able to compete and increase our share of business. So we will continue to do that. Improvement in manufacturing is an ongoing thing. We will face the challenges on price erosion. And whatever happens in the US market last few years, we have been growing in that area. So we'll continue to do so.
Okay. Okay, Mr. Chigurupati, the other aspect is the whole value chain. Notes speak about how you're also trying to backward integrate, as also move up the value chain for better growth, better profitability. How do you do this? Is this significant capex or not quite? Can you give us some insights?
Going backwards, integrating backwards, capex is needed, but not a huge lot. We already have some facilities. Our Unit 5 in Vizag, which was not really contributing for a few years, that we are exploiting now, and we are expanding there for API capacities. So it will not need a lot of capex. Maybe we will continue to maintain our capex between 400 to 500 crores every year, and that will be split between API expansion and formulation expansions. Our GLS plant, which is at Genome Valley here, is partly operational now, and it will be fully operational by January. That should give us about 10 billion doses of formulations that will keep us going for a few years, and backward integration will continue to grow.
Thank you very much, sir, for joining us this morning. Congratulations and good luck. Looks promising for Granules, and we hope all your plans play out as expected. We'll hopefully see you soon as well. With that, the market's aren't doing too badly. The Nifty and the Sensex trade flat. Bank Nifty is trading marginally lower, but it's all about earnings and all about stock-specific reaction on the street this morning. We'll take a break. We'll come back, put the focus on 2 big auto earnings that the street is eyeing.
Back with India Market Open right here on NDTV Profit. Now, today is an important day. Actually, between today and tomorrow, we have three big auto majors coming out with the numbers. Let's focus on today. Maruti set to report numbers. M&M set to report numbers as well. Puneet joins us with the key monitorables. First, for Maruti. Puneet, take it away.
Yeah, thanks for that. So expecting a good quarter in for all three passenger makers, as you said. Let's start with Maruti first. Expecting good revenue growth of roughly 7%, but margins are going to be expected to be very strong, coming at roughly 420 basis point improvement from the same time last year at roughly 13.4%. That's really strong compared to last year when the margins were around the 9 to 10% range. Net profit is also expected to rise to roughly 3,400 or approximately 3,500 odd crores. That's a 38% rise from the same time last year. Now, volumes for the quarter is already out, roughly 5.22 lakh units sold by the company. This is a growth of roughly 5%. And this is strong, much better than what the expectation was for each month from brokerages as well. One of the key things has, of course, been the launch of the Dream series, where they're launching new entry-level, the older Celerio as well as Alto in a much better price range of roughly 4.99 lakh units. This was launched in the month of June at the end of the quarter one, and the company has extended it to July as well. So a little more commentary on that. The second thing, a key monitorable, is of course the launch of Swift, which happened in the month of May. This has sold around 30,000 units in the quarter, and another, some update on that will also be key. Nomura is also seeing some positive results because of favorable price hike that the company has taken, as well as a mix of higher SUVs sold in this particular quarter. Back to you.
Puneet, let's talk a bit about M&M. Those numbers are also expected out this quarter, and the big buzz for this company has been actually expanding its stable and having more products at every price point. Would you be looking for more details on that, and what can we expect on the numbers?
Well, definitely. So it's continuing its momentum from the previous fiscal year of showing strong revenue as well as PAT growth. So in this particular quarter, we are expecting 16% revenue growth on a standalone basis to come in at around 28,000 odd crores. Margins are also expected to rise by roughly 8%, and they're maintaining the 13 to 14% range in this particular quarter as well. Specifically, around 13.7% is expected in this quarter. Net profit is expected to rise by low single digits in this particular quarter because they have made a lot of marketing investments for the new launches. They're expected to come at roughly 2,800 odd crores of PAT in this particular quarter. Now, a few things to look out for will be, of course, the launch of the 3XO, which happened in May. This was a key disruptor, and we'll be noting if the company's already made dispatches, and also any kind of update on the booking number as well will be key. They had strong volume growth in this quarter, roughly 14%, which was the highest among other passenger car makers as well. So that's definitely one of the key positives that should impact margins as well. Nomura is seeing strong operating leverage benefits coming in this particular quarter. They have said that, of 3XO, of course, is a key monitorable, but apart from that, the Thar 5-door, where the Mahindra has teased the launch of this particular product, long-awaited product over the last 3 to 4 years, will be key. Apart from that, some more details on the next EV launch in this particular quarter. We know Tata is coming out with the Curve EV this week on 7th of August. So a little more details on that will be key. But overall, positive results for both these passenger makers today. Back to you.
Okay, Puneet, thanks so much. Puneet, just one quick 20-second answer. Could there be one-offs in M&M because of last year's numbers that one should consider?
Potentially, yes, but it'll be too speculative to comment on that right now. Brokerage is not expecting too much on one-offs, but we could possibly look at that.
Got it. Okay, thanks. Let's just wait and watch. Thanks, Puneet, for that. Watch out, dividend income, other income, a lot could happen between M&M's numbers and the fine print thereof. Okay, while we are at it, let me get in my colleague Rucha to talk about what is the brokerage reaction been to the SEBI consultation paper on measures which will impact the F&O market. Let me qualify it that way. Rucha, what are brokerages saying?
Right, so we have two brokerages, IIFL and Jefferies. Now talking about IIFL, it sees highest impact from the withdrawal of weekly options. Also increasing the contract size by 2 to 3 times can constrain the retail investors. Higher margin near the expiry can also cause a problem in liquidity, especially for retail investors. Now talking about the specific stock impact which IIFL estimates is that higher impact will be seen for NSE as options account for 60% of the revenue. Now Now, talking about BSE, a slightly less impact can be seen over here as options account for 40% of the revenue. Now, talking about the FY26 earnings, 25 to 30% of the impact can be for BSE on its FY26 earnings, and 15 to 18% for the BSE. Now, they don't see any impact on the commodity exchange from these regulations. However, return of interest income on the margin money will have a higher impact on BSE, about 10% as compared to a 4% impact to NSE. Now, let's talk about what Jefferies has on this kind of stock impact. Now, the removal of weekly options can impact 35% of the industry premium according to Jefferies. Also, the phased hike in lot size and the margin hike as well will impact the retail investors. This is what we saw even for IIFL as well. Now, talking about BSE earnings impact, around 8% will be impacted for BSE over FY25 to FY27. However, gains from the spillover of discontinued activity can offset this likely BSE impact, is what Jefferies has to say.
Right. So that is what Jefferies is saying. Well, Jefferies thought BSE will be impacted the most. Let's pull up that BSE stock just before we take a break on the show and see what's happening. I mean, I don't quite know what to say. It's 7% up now on the BSE. Is it? I said this morning when we were looking at the stock right after opening that the house always wins. And that's what it seems to be, because whatever happens, you might have some impact on volumes. I mean, there's a tweet out from Nitin Kamath today who says that maybe on futures you might see some impact, not so much on options. As the market and all the key participants break down the various formulations of impact, maybe in the long and short of it, the BSE comes out on top.
Yeah. You know, so the Jefferies note says that gains from spillover of trading activity from discontinued products can offset EPS impact, and in the event of moderate industry-wide impact of SEBI measures, can even drive EPS upgrades. So
they've said both things. So that's the best way to analyze something. You always end up right. All right. On that note, we'll take a very short break. Markets are flat, but nothing really negative going on right now in terms of an impact from SEBI's proposals. That's all we have on India Market Open, but stay tuned. Talking Point up next.
Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. Guest today is Naveen Chandramohan, founder of ITUS Capital.